Raamdeo Agrawal, Joint Director and Co-Founder of Motilal Oswal Financial Services joins us. Raamdeo, good morning. Good to have you back. Raamdeo, before I throw a question at you, let me just flag off the first page of your India strategy report. Your research team is calling it the new Indian rupee roulette. Is that the biggest concern, Raamdeo?
I mean, that's what we are seeing right now for the last 2-3 months. That's been the problem, and if that problem gets sorted out, in the sense that if you see the top of it, I think a lot of things will start stabilizing. I mean, what should be the diesel price, what should be the behavior of the foreigners, how to look at the economy, what will be the new parity for the exporters, what will be the new parity for importers. So I think it's a very big issue right now.
So do you think till the time Indian rupee will not stabilize, stock markets will not do anything special?
It's an important factor in the sense that I mean, one is feeling quite constant, and a lot of corporates don't know what to do, because you had 8-10 years of very stable currency, and a lot of people have forgotten that they have to hedge their whatever they have borrowed in foreign currency. So a lot of corporates have kept very large exposures without hedging it in the global markets. And in any case, the kind of cost you have for hedging for very long term, it is not possible. So most of these companies are really helpless in terms of what could be their eventual liability in rupee terms. So it is important that we get this. And even the FI, if you look at this, they have been the biggest buyers in the last 2-3 years. And they have been the biggest sufferer in this kind of rupee fall. I mean, somebody is managing $1 billion, they lose about 250-300 million just like that. I mean, without any fault of theirs. So I think, and it's not that it's only India, but all emerging markets, this problem is there. But India is very, very acute.
Raamdeo, so up until now, we've only seen ETF money actually pull out of equities. Do you think there could be a chance in the near term where we could be staring at long-only money as well pulling out?
It's very difficult to say how they think and what will push them finally to make an exit from here. But still, if you look at the global allocation of equities in India, is still I think below what they would like to have, and that's one reason foreigners are not selling. And second is that they really build a portfolio around blue chips. I mean, if you look at the bulk of the blue chips out of India, they're held by foreigners. So and they also know that if they get out, then probably rebuilding the portfolio would also take a lot of effort. So mostly with under allocation to India in equities, I think they might be reluctant till it becomes completely unbearable.
So what is the case when it comes to the market, Raamdeo? I mean, do you think the Nifty will amble in a range of 200 odd points with 5,500 being a clear support for the market? Or do you think there is a chance that we could slip further than that?
I'm actually surprised by the strength market has shown despite the sustained rupee weakness. Market has really shown very courageable, very high level of stability. So I think, and my sense is that this 60-61 should be some kind of limit at which RBI will come and try to support rupee. So if that were to be the case, say 60-61 to be the kind of at least the worst point at this juncture, in that case we should see at least some stabilization of markets at this level. But with the FI's behavior and so many factors working in for and against, in terms of currencies, in terms of dollar strength, in terms of commodity prices, capital flows from one side to other side, it's very tough to really predict how they'll behave and what will be the impact on the marketplace.
You're sounding like a different Raamdeo Agrawal to me, because the Raamdeo Agrawal I've always interacted with, he's of the view that in times of despair you get the best bargains. Currently the times are despair, but you are also sounding slightly desperate.
No. See, when it comes to trying to predict the market, then this kind of frustration. But life goes on in the sense that I mean, this is a time when withdrawal of the investors are total, and you get on to finding your own stock and getting on. See, the investing process is not impacted by all this. I mean, it is just the noise, and really volatility is so much higher that it makes you tired, because ultimately you cannot stop watching the market day in, day out.
So if you have to filter through all the noise, what's looking interesting?
Yeah, I think still the beneficiaries of fall in the rupee, and I would say sustained fall in rupee, because the fall has happened in last say 6 to 8 months, but I think the lasting impact is going to be much longer. So even if some of the exporters would have sold their say next 6 months or 8 months of earnings in the marketplace, I think life is going to be much longer, and maybe in 14-15 and 15-16 their earnings could be I mean, it will be at a different level altogether. As you just talked about Bajaj Auto, it is the fourth largest net exporter from India after the 3-4 IT companies. So it has a very good local cost base, and as you were saying, they have little pricing power in the global markets. Maybe the markets are a little slow to pick up their products, but I think they have a franchise in the world markets, and they should significantly benefit out of the weak rupee with their domestic cost base.
You're really sounding different to me, Mr. Agrawal. The Raamdeo Agrawal I know talks Hero Honda. He doesn't speak Bajaj Auto. Now you're recommending Bajaj Auto.
No, but today with the rupee decline, Hero doesn't have much of export base. I mean, though they have aspirations to build the export franchise, but the real successful story of automobile export is from Bajaj Auto. So you can't take away what somebody has done well.
We've discussed financials in the past, and you made a case that why one should load up financial stocks, and I remember you gave me a number that 40% of the exposure should be done in financials. Is it time to revisit that strategy, because macros are not improving, and if the economy does not recover, financials will do poorly?
No, I don't think. I mean, very selective financials will keep doing well. I mean, whether it is a well-run private sector bank or some of the niche NBFCs, I think they have been the best performer. And you might have seen the season has started with one result from Group Finance. It's a very well-run small HFC, and they have come out with 25%, 26% kind of earnings growth. So I think NBFCs and private sector banks at the cost of PSU banks, I think will keep doing well so long as 2/3 of the financial sector is under the government lenses.
Raamdeo, you just talked about group finance, but soon we'll have all the Nifty 50 names as well come out with their earnings.
Yeah.
Should one pin their hopes too high in terms of any green shoots or dark horses which would emerge in the first quarter earnings season, or do you think balance sheet pain is going to remain this quarter as well?
I don't think there'll be many surprises except for this financial sector and few select consumer companies. I think rest all are going to be quite on the predictable lines, and I don't think. I mean, you have the copy of the our quarterly, which is very extensively done, and we are expecting very flattish kind of situation. So one or two sectors where there are some regulatory changes, like say telecom. That's where you could see some fireworks in terms of nobody has clue how it is going to be positive quarter on quarter, but could it be something bigger than what market is thinking? So that's one sector which is worth watching, which is turning around very nicely after the consolidation. But apart from that, I don't see any positive surprises coming from anywhere.
So is it time to buy Bharti right now then?
It's not that simple, because Bharti's balance sheet is split between domestic. I mean, if it was purely domestic company, beyond doubt it is a terrific buy. But they have a very large portion of their balance sheet unhedged and invested in African asset called Zen Africa. So what's happening there? I mean, till last quarter it has not been kind of doing too well. But hopefully next 1 or 2 quarters, if they do well, that could turn out to be a very big surprise. But I don't have any clue how well they're doing there.
If you expect that the worst of policy news flow in telecom is behind us, and Bharti has a leverage problem and they have a dollar-denominated debt, should one buy into Idea?
Yeah, I mean, if somebody is very keen to, Idea has done very well in the marketplace in last 1 year or so. And there is no reason why when the story pans out, Idea will not do well. I mean, it's a clean Indian asset, though it is not the leader in Indian market. But I would think incrementally they will do very well.
Anything else which is on your radar? Because in last 1 month, we've seen a serious degree of price adjustment, both in large and mid-cap stocks. Anything which is looking like a value long-term buy?
No, I mean, there is always something other happening. I mean, one can keep busy in terms of looking at the stock. See, what is happening is market is completely divided between what is good and what is bad. There is no shades of grey. So, if a company is very large and very profitable, but considered as bad, untouchable. So, despite the strength of the franchise and largeness of the profits and everything, absolutely there is no taker for those companies. So, I think in some of them you will get definitely opportunity. When a market turns around, those are the companies where franchise is safe, which is very large, very high quality, very high cash flow. I think whenever the mood turns, I mean, those are the stocks where you have a value kind of situation.
Let me put a gun to your head and ask you that what is keeping you busy?
Always it keeps you busy to find the next one idea, and you just start drilling around and find whether you understand the business and whether you are willing to take I mean, since I don't have much money left in the sense that what dividends are coming, that's the one which you can invest. But you can also churn the portfolio in the sense that something is not good enough and what you are looking at as a new idea is looking better. So there's no harm in even booking loss and buying something better.
Okay, so you manage and foresee a fund called the Next $1 Trillion Opportunity, and that fund I've been told has done exceptionally well this year. What's the strategy there? What are you buying or selling there? So I know a flavor of what you're thinking and doing.
No. See, first thing is I'm not the fund manager. It is right under my supervision that there is Manish Santolia, he manages the fund. He's done a wonderful job. And the investing style remains same, buy and hold, very focused. And quality names are there. So we call our investment style as a QGL, quality, growth and longevity. So we are practicing under that. He has about 16, 17 stocks under the belt. The portfolio is declared. So I think probably in the mid-cap space, this is one of the best performing funds.
Okay, Mr. Agrawal, really good chatting with you. Appreciate you taking the time out and joining us today on 18 Hours. Always leave the market holding around 58.50, and that's a wrap then in this edition of First Take.